So if you've ever served in the military and you're not using a VA loan, you're either uninformed or not interested in saving any money whatsoever. The VA loan is probably one of the most powerful financial tools we have in home loan residential lending today. No down payment, no PMI, as in private mortgage insurance. On a conventional loan, when you don't put 20% down, there's insurance policies that are in place to kind of hedge against that. So the reality is veterans, the VA loan has no private mortgage insurance, no PMI. You have substantially lower rates than conventional financing. And then the general guidelines are just much, much better. A lot of people think VA loans have a bad rap. So veteran will get done with their active duty or their service and then go to a bank and ask for an FHA loan because they just don't know any difference, or they think or have been steered that a VA loan is just wrong. And not wrong, but more difficult, and sellers aren't interested. It's just absolutely false. This video breaks down kind of exactly how a VA loan works, who qualifies, and some of the myths that we're kind of identifying and seeing over the years. So the VA loan, how does it actually work? Myself, the bank gives you money. We lend to you, you're a veteran. Thank you for your service, by the way, and we give you the money. What makes a VA loan so appealing to a lender is that it's guaranteed by the government, meaning you have served your country, and one of your eligibility requirement, or one of your eligibility components is you get to use a VA loan. What that means is the government says, hey, we will insure this in case you kind of default. That's kind of a big deal, especially if you think back to like 2008 when everyone and their mother, it was like somewhere in the neighborhood of 50 million people foreclosed on their houses. Us as banks, we don't like that because that puts us in trouble. So the government jumps in and says, hey, we will insure against this, which means that you're not risky in the eyes of the lender or the bank. So they give you, one, you get really, really good terms. So low interest rates, no PMI, more loose underwriting guidelines, and the whole better rate thing, because technically you're not as risky. Here's what you get with a VA loan. So zero down. So 100% financing, not a hype. That's $0 to close on, say, a $500,000 loan. You can put earnest money down. Sometimes they require that. You get that back at closing. You can put your inspection, put your appraisal, put all that down. And technically, we as lenders could help offset some of those closing costs to truly get a no money down loan. In today's market, a lot of those sellers are willing to contribute to help the veteran get into the loan as well. No PMI, that saves hundreds of dollars a month. I'll give you an example. Mortgage insurance on, say, a conventional loan, someone who hasn't served, that isn't a veteran. Maybe their credit isn't perfect, 680, 710, something like that. And you put 3 to 5% down on a conventional loan, that could be $400-500 a month on mortgage insurance. The lender deems you as riskier. The riskier you are, the lower your credit is, the lower your down payment is, the more your mortgage insurance is. That could kick you out of being able to afford a home in general. A VA loan, there's no private mortgage insurance, and because it's guaranteed by the government, your interest rate's gonna change based on your credit score, but you still don't have mortgage insurance, and those underwriting guidelines are still gonna just be nice and flexible for you. Just one of the amazing benefits that you have by being a veteran. Certainly lower interest rates than conventional, sometimes half up to 1%. Big numbers, which again, if you take away the mortgage insurance and you take away the stack of rates that are happening today, and as I speak out loud, they're around 6.75, something to that extent. You could see in some cases a 599, 5875, and no mortgage insurance. All of a sudden, you have the ability to afford a house that a normal person didn't serve, looking to buy a home, could otherwise afford. So big one. There's no limits technically if you've got your full entitlement. When you get your certificate of eligibility, which is something they provide you with once you're done with your service or if you're still active duty, then you will have the ability to use a full entitlement, and you can afford almost any normal loan amount up to the conventional conforming loan amount, and in some cases more. Kind of a big deal there. A lot to unpack there. I'll do another video on how entitlement works specifically and some of the hacks with the entitlement that you can do. So the other part of it is you can reuse it multiple times. Let's say you have this house. A lot of what we're seeing now is you have a home and it's 2%. Some people got 2%, 2.25. I've seen a 1 7/8 buy down back in 21. And now they're kind of stuck. They don't know what to do. They don't want to vacate their house and then have a rate today that's in the high 5s or low 6s. But what you can do is, again, you can sell that house. And once you sell that house, it's got the VA loan, you fully restore your entitlement and continue to buy, right? So that's a normal thing. I'll give you a perfect example of something that happened just last week. So gentleman, veteran, wonderful family, looking to do kind of the hack. They have a VA loan on their current house they bought back in 21. They were very reasonable in the amount of loan that they spent. I think their balance on their house now is like 290, 310, something like that. Their VA entitlement, actually, there's enough money left over for them to keep this very, very low interest rate on the VA loan, rent their house out, depart it, and then get 100% financing on a new VA loan. So they literally have 2 VA loans. Now, they're going to exhaust their entitlement. So in order for them to buy another house, they're either gonna take it conventional financing, which is possible, keep the 2 VA loans, or maybe sell one of the current loans, restore the entitlement, or sell them both and upgrade as well. Definitely can have more than one VA loan. You just have a certain entitlement benefit that will allow you to buy a home with 100% financing. Now I'm gonna go even deeper down a rabbit hole. In this same example, the gentleman could afford up to a $500,000 loan based on the current mortgage he had and how old it was and the new loan. Well, he was interested in doing a $600,000 purchase price and 100% financing, but I could only go up to a $500,000 loan based on his entitlement for 100% financing, right? All we have to do there is take the difference between what I can max out his loan amount for and the purchase price. He has to do 25% of the difference, okay? So in that scenario, it was what, $100,000 difference? So he has to come up with $25,000 plus any closing costs if there are. That's how you kind of work that angle. That's one of the hacks that we traditionally do and love it. So bottom line, so you get leverage at a discount, and I would just simply say, if you're not using this, it's a wonderful feature. And if you're not using it like in the scenario this gentleman's doing, you're actually kind of doing yourself a disservice, because there's a really good opportunity for you to start building generational wealth in that space. Next question is, who qualifies? So obviously you're active duty. I'll just read off the bullet points here. 90 days active duty during war, you're eligible. 181 days of active duty during peacetime, you're eligible. 6 years in the Guard or Reserves, that one comes up a lot. So 6 years in the Guard or Reserves, you're eligible, but you gotta be a minimum of 6 years, okay? Surviving spouse of a veteran who died in service, that person is eligible. Honorable discharge, certainly from service, eligible. Dishonorable discharge, you forfeit those benefits. Don't assume, let's check. It only takes about 5 minutes for you to check your certificate eligibility. And then also, if you have a current VA loan and you're looking to maybe do what I suggested earlier, then all we would ask is your DD-214 and then your certificate of eligibility form. And then we can actually check and see how much your entitlement is available to you. And then obviously just tell you the benefit of what you have available or left. Okay. Again, I'll circle back. Here's how it works. So the lender gives you money. I give you money. I say, thank you for your service. You can afford a $500,000 loan. The government backs the loan. So that's why we determine that it's not risky. So we'll offer better interest rates. The underwriting is better. Credit is not as much of an issue. There's no private mortgage insurance because the government basically handles all that. So as a tribute to your service, these are the things that you get to take advantage of. So if you default, the government says, we'll cover part of that loss. We'll cover 25% of that loss, right? So that's basically how that works. You still have to qualify. You still need to have reasonable credit. You do need to have income, stable and steady income, and your debts can't exceed a certain extent. We use the automated underwriting system, and I found that folks that have debt versus income ratio on a conventional loan typically goes up to about 49%. So we'll call it 50%. But depending on the credit score of the borrower, and if there's any down payment and just the reliability of the veteran, I've seen it approve up to 65, 66%. So truly you get lower rates, no PMI, you can use it multiple times. You can buy 1 to 4 family fourplex if you want, rent it out, live in one of the units, better terms, lower underwriting guidelines, high debt to income ratio. Like, it truly is a hack to get you into a home that you otherwise wouldn't have. Again, a person that didn't serve, that maybe has had some derogatory credit or a lower credit score versus a veteran who maybe had that same scenario. The difference is they could probably afford a house versus the person who may not. Let's play a quick Mythbusters thing. Some of the dumb excuses that I've heard fairly regularly. So one, you can only use it once. So that's not true. You can actually use it multiple times, and you just got to be able to restore your entitlement. So you need to make sure you're talking to a lender that kind of understands that process. Second, VA loans take forever to close. That's not true. That may have been true back in 2008 or something to that extent, but today it's not true. What you're hearing is, on my end, it only takes a couple of days to get you approved and fully funded. And to the extent of the borrower's cooperation, I should say, that's also a big component of it too. So if the borrower's cooperative and the lender knows what they're doing, it's days. The only component to that is we are at the mercy of the VA on appraisals, and sometimes those can take a couple of weeks, but never to an extent that they take forever to close. So that's just a dumb excuse. It's not real. Also, you can't use it for investment properties. I hear that one a lot. You're half right. You can't use it to buy an investment but you can use it as a house hack. So just like I was saying, you manage your VA home loan and then you depart that residence, rent it out, and then buy another one. As long as you're within your entitlement component, then you're fine. And then furthermore, again, if you don't utilize all of it, you can continue to use those benefits as long as your entitlement's in place. The other part is you can buy a fourplex, live in one spot, rent the rest, 0% down. I mean, the reality is stop listening to broke people and stop listening to what the rest of the world is saying. Make sure that if you have an interest in trying to jump in this space, that you're actually communicating with the right people that can put you in place. Yeah, let's just chat about the one cost, the funding fee. So perhaps you guys have heard that term. When you're a veteran and you're a first-time user of your entitlement loan or the VA loan, you have to pay a fee to fund the program. And that fee ranges usually from 1.5% to 3.3% between a first-time user and a subsequent user. That money gets rolled into loan, or you can pay it up front. You just keep that in mind. That VA loan has a funding fee, and if it's a subsequent use, it can get more expensive unless you're putting money down. So the hack there is, let's say you've got a VA loan and then you sell your house and you restore your entitlement and you've got some money to put down. That's how you keep that funding fee lower. But each time you use it, there is a subsequent use fee, and it does just get rolled into the overall loan amount. If you are disabled or you've got a service disability, that typically doesn't apply. So there's no funding fee. So again, there's so many reasons why this makes a lot of sense if you're a veteran, but that's a big one too. So that, I mean, that could save you $8,000 to $15,000 right there if you have a service disability and you didn't know that you had that. So again, talk to somebody who knows what they're doing, right? And again, if you've got a down payment, that significantly reduces that funding fee as well. What do you do right now? So if you're interested and you want to jump in and potentially see if you can qualify for home, go get your certificate of eligibility or go work with a lender that is comfortable doing that. I am certainly comfortable. My team is certainly comfortable in doing that. And then ultimately we'll pre-approve you and say, here's your entitlement, here's what you can afford. Tell us what your kind of dream is, and we'll package that thing up, get you pre-approval, and then we'll set you in touch with a real estate agent if you don't have one, and you just go start making offers. It's really that simple. And again, there's nowhere on the planet that a seller is not interested in doing a VA loan, in my opinion, because it's such a wonderful service. And otherwise, if a seller doesn't want to work with you, they're just an asshole. So, I mean, how rude is that? So you don't want that house anyway. So I think that's all I got. You served your country. In return, they have given you this wonderful, spectacular loan. And I just really would encourage you to jump into that space and take a look. 100% financing, buy a fourplex, buy a duplex, or buy a residential, single family residential. You can use it to build wealth, build generational wealth. I think you really need to take advantage of that. And if you're not, then you're an idiot.